guys, it's Leo with RetireWise, and I'm here talking with Todd today about life insurance. So we'll just go ahead and dive right into our first question, which is, what are the main types of life insurance, and how do you determine which is right for someone?
Good. So basically there's two types of insurance. There's term insurance, which means it lasts for a certain time period, and then typically it would expire. And then there's whole life insurance. Typically we would use whole life insurance mainly for like burial policies. They're typically a lower amount, and they grow a cash value. A term policy does not. Term policy typically is a higher dollar amount, and it's a cheaper policy.
Yeah. Okay, perfect.
Yep.
All right. How much life insurance coverage does the average person need, and what factors should be considered in that calculation?
Yeah, good. So what most people do is we would advise them to get 10 times their salary. Okay. So we want people to get 10 times their salary. Typically that's a term policy. In case of an emergency or something happens, then, if I die, my wife has enough money for the next 10 years to continue on her lifestyle.
Yeah.
So typically we would say 10 years.
Okay, perfect. Yeah,
Yep.
great. All right. What are some common misconceptions about life insurance that you wish more people understood?
That is a great question. I like that question because most people's perception of insurance is, Todd dies, his wife gets X. Insurance can be used for a multiple of different things. What I like about it is a lot of the insurance companies now have what they call living benefits. So what that means, Leah, is I don't have to die to be able to use the insurance. So if I have a heart attack, stroke, or cancer, I can accelerate the policy while I'm alive.
Okay.
So I always I know it may be crude, but I always say to people, I don't want to have a stroke and not die and watch my wife lose everything because I didn't die. So with this type of insurance and type of opportunities that are available with some of our plans, we can accelerate the policy while you're alive. So that can pay my bills, that could pay the truck. It can also help with businesses. So if something happened to me, or one time we had a situation where a young lady owned a nail salon. Well, she got diagnosed with cancer, and she was the salon, if you will.
Yeah.
So she was able to accelerate this policy and hire someone to go in and work. She had the money now to pay someone to go in and work and to continue her business while she went through chemo. Wow. She's now healed, praise God, and she's back to work, but it's just not a death benefit. Yeah. That's the biggest
good to know.
misconception.
Absolutely. I think a lot of people don't know that. So
Yep.
That's perfect. All right. How can life insurance be used as part of an overall financial plan beyond just providing a death benefit?
Yeah, that's what I like to use it for is to protect assets. So there's certain type of insurance policies that, like, if we're building you a retirement plan and you get sick, if you're in the funding phase of your retirement plan and you get sick, heart attack, stroke, or cancer, and you can't go to work, well, guess what? You can't fund your policy. Yeah. You can't fund your retirement plan. This way, we could use this insurance company to accelerate living benefits, take a portion of that money to take care of you, but we could also take a portion of that money and continue to fund your retirement for when you're not sick. Okay. So we want to make sure that number one, that we protect your investment and that we have a way to fund it if something happens to you.
Absolutely. All right, that takes us to our last question, diving in a little bit more to the different types.
Sure.
Which is, what are the differences between term and permanent life insurance, and then what are the pros and cons of each?
Okay, so basically what we would do there, Leah, is find out what your need is. A lot of things that I look at is number one, what's your age? I don't need to give so there's term policies, which is simply it's amount of insurance for a length of time, a term. Typically they're 20 years, 30 years. We can do smaller terms, just depending on your needs. So a term policy I would use for a younger person and give them more money because it's cheaper. Yeah. And they have more that they need to protect at their younger age. An older person like me or someone older than me, they may need a whole life policy something that's going to grow some cash value, something that's going to be used as my final wishes, my funeral, or whatever. So the biggest difference is one grows cash value and never expires. That's the whole life policy.
Okay.
And one of them is for a term, a length of time, and it's generally a larger amount of money.
Okay, awesome. Thank you so much for that. That was super helpful, so thank you so much.
Sure.
So you guys be sure to tune in next time for more information on how to retire wise.